I have with me Lowell Epp, the Assistant Deputy Minister of Treasury and Risk Management in Alberta, and Mike Manning, the Executive Director and Chief Investment Officer of Capital Markets at Ontario Financing Authority. So I'd like you both to start off and give your fiscal outlook. If you could start off, Lowell.
Sure. Our fiscal outlook certainly improved in the first quarter. In budget, we forecast a deficit of $18.2 billion due to higher employment levels, but particularly higher oil price levels. We are now forecasting a budget deficit of $7.8 billion. The employment has, like I said, improved significantly. We're almost back to the same number of jobs in Alberta as we had pre-pandemic. They're different jobs in many cases, but we've achieved that employment level.
Yeah, we certainly have a recovery in the labor market in Canada. It's recovered a lot over the summer months as we've reopened. Mike, can you give an overview of your fiscal outlook?
Yeah, I'd just like to point out that on Friday of last week, September 24th, Ontario released its 2020-21 public accounts. And it reported a deficit for 2020-21 of $16.4 billion. Remarkably, that was a $22.1 billion lower number than we had in our 2020 budget. This resulted from stronger revenue growth and led by higher than anticipated corporate and personal income taxes, due in part to the overwhelming COVID-19 supports provided by all levels of government, as well as lower than projected expenses. We will be taking a measured approach, and we'll be in our fall economic statement, which is our mid-year report. We'll be taking a fresh look at our deficit numbers, as well as our borrowing requirements, for the remainder of the fiscal year. Prior to that, we did have in our Q1 finances that came out in August, we did have a lower deficit number for the current fiscal year of $32.4 billion, and that compares to 33.1, which was the budget estimate at the start of the year. So it seems that our fiscal situation is improving somewhat. So sort of in line with what we're seeing maybe with some of the other provinces as well.
And Mike, can you go in then a little bit to your borrowing program and what your needs are for the rest of this year?
Sure. So our current borrowing requirement is $53 billion, and that number was derived from our Q1 finances. Factoring in that we borrowed about $24.6 billion already, the remaining borrowing requirement for the current fiscal year is about $28.4 billion. Just in terms of context, the $53 billion requirement is down from the $59.8 billion that we borrowed last year.
Okay. And Lowell, what are Alberta's borrowing needs for the rest of this year?
So we started the year with a borrowing requirement of $24 billion, and that's been reduced to $17.6 billion. We've raised approximately $7.5 billion this year so far, including $4.2 billion in the bond market and about $3 billion in the money market through increased short-term debt. That leaves us with about $10 billion left to borrow this year, which we expect to do in the bond markets.
And what's been the appetite for that in terms of domestically, and have you issued any internationally, or will you be?
We haven't issued anything internationally, mostly because we haven't borrowed as much as we thought we would in the first half of the year. So the appetite domestically is strong. With higher oil prices, our spreads have been coming in consistently. So right now, the appetite for Alberta bonds seems to be very, very good.
And Mike, can you speak to the demand for your bonds, how it's been, and whether you've done any international or U.S. dollar issuance?
Sure. I would say that the demand for our bonds has been very strong. It's sort of been anchored in the domestic market, where so far we've done 22 domestic deals, kind of roughly to the midpoint of the year. That compares with the record issuance last year of about 38 domestic deals, and the volumes are quite good as well. So domestically, the market's been very strong. It's provided good duration in terms of being able to do 10-year and 30-year issuance. Internationally, we've also been relatively active, maybe a bit less so than the previous year. We've done a $3 billion US dollar 5-year deal we did back in April. We've done a $1 billion euro. We've done 250 million Swiss francs and a small 35 million Australian dollar transaction. So we've been active, a bit less so than last year, but still the international component has been about 23% of our borrowing program so far.
Okay. And Ontario, it's been one of the largest issuers of green bonds here in Canada. And there were reports that you were considering to add a sustainable bond program. Can you talk about why it would be necessary to add a second bond program, a second ESG bond program?
Sure. Maybe what I'll do is maybe talk first a little bit about our green bond program. So we've been a regular issuer of green bonds since 2014. Over the years, Ontario has issued about 10.75 billion of green bonds, and is the largest and most regular issuer of Canadian dollar green bonds worldwide. We benefit from having an infrastructure spending program to support our green bond program. For example, spending on transit is estimated to be almost $54 billion over the next 10 years. So that provides a good pipeline of projects that we can use for issuing green bonds. I'll just mention we've been issuing, in recent years, we've been issuing 2 green bonds every year. Our last green bond was a $2.75 billion offering, which we did on July 27th. It was our 10th green bond and the largest ever offering of a Canadian dollar green bond. And we expect to offer our next green bond later this fiscal year. We haven't determined an actual date yet, but typically it will be the fall or potentially early in the new calendar year. We put together our green bond program, as I said, back in 2014. And one of the first things that we worked on in developing the program was a green bond framework. So our green bond framework is getting a little bit stale. So we're, as you mentioned, we're in the process of taking a look at that framework. And sustainability is something we're going to look at. We have no plans to issue social bonds at this point in time. But we think it's, given the fact we're looking at an update, we think to expand it to sustainability just makes a lot of sense.
Okay. And do you have any timeline for that?
It's a fairly intensive process. We've reached out to some of our dealers, and we've got feedback on our framework, so we are working on it. It's a fairly comprehensive project, so I suspect that we'll have it done by the end of the fiscal year.
Okay. And Lowell, can you talk about whether Alberta may be issuing any green bonds in the future and why or why not?
So far, we haven't set up a framework for green bonds. Our attention has been elsewhere. We certainly monitor the market and recognize it's an important market, but right now we really don't see that it is worth the effort for the savings in borrowing costs that we estimate. The other thing is that while Mike has many projects to issue green bonds against, we have much fewer projects to issue green bonds against. the government is more focused on encouraging innovation from the private sector.
Okay. And so what kind of demand would that mean? Like what kind of, is that mainly domestic demand for those kind of projects? Or could you talk about what kind of projects the government's interested in?
Well, what the government is interested in the ESG space is helping various energy companies meet their targets and develop technology. We have a carbon tax program in Alberta, separate from the Canadian carbon tax. And that program, the revenue from that is much of it is invested in technology or development for the oil sands and energy sector.
Okay. And I did want to ask you, I guess, Lowell, if you want to start off, what are your thoughts on the economic outlook? And then, of course, how that may impact issuance. Alberta has been in the middle of a fourth wave. It's been pretty tough. And so we don't know yet what will happen as kids have gone back to school. We may find out in a few weeks how that may affect the economy and further restrictions. So I wanted to get your thoughts on that.
So it's kind of early to tell what the economic impact has been. So far, the government has not had a very restrictive lockdown, as restrictive as some are calling for. This has allowed more businesses to stay open and continue to produce in this environment. What we see, there's no doubt that fourth wave has hit Alberta pretty hard, and there's no doubt. But much of our employment, much of our industry is not reliant on the retail sector. And so those industries tend to do better in the lockdown environment than others.
Okay. And Mike, can you talk about your outlook?
Yeah, I think, the outlook it's certainly improved. We did our budget back in March of this year. We were looking at a real GDP growth rate of around 4%, which was quite conservative, I think, at that point in time. And later on, when we did our Q1 finances, that growth estimate was upgraded to about 5%. So it is definitely been improving. But I'd have to say that the level of uncertainty is still high. And, there may be some further impact from the fourth wave. But as shown by our public accounts, the fiscal situation appears to be very, very resilient. So I think that's where I take some positive, have a relatively positive outlook on that.
Mm-hmm. And we all, high vaccination rates in Canada relative to other countries. So with the vaccine passports, maybe there will be fewer restrictions. And I do have time for one or two more questions. Mike, I did want to ask you, as Ontario goes ahead with a path to reduce the budget deficit, the volume of debt outstanding has been significantly bigger than before the pandemic. So in that context, do you have plans to issue in new currencies or durations?
I don't really believe so. I think we are focusing on the domestic market. The domestic market tends to provide slightly more cost-effective debt than when we go offshore. So we've really been focusing on that. The nice thing about the domestic market is also provides duration, longer-term debt that we would get, for example, in the international markets typically. So I think we'll continue to focus on that. Also, it's efficient in the sense that it doesn't have to be swapped back to Canadian dollars, which we do with most of our foreign issuance. So I think we will continue to focus on that. But at the same time, we are regular issuers in international markets as well. Typically in U.S. dollars, we tend to do roughly 3 to 4 benchmark U.S. dollar deals per year. Our last U.S. dollar deal was actually a $3 billion 5-year deal we did back in April. So I would think that we will be looking to do at least one more U.S. dollar deal between now and the end of the year. The euro market is also a core market for us. We've done one deal there already, but we'll be looking there. And the other currencies, we're monitoring a host of currencies. If we do see arbitrage, or we do see a good issuing opportunity, we would definitely be taking advantage of that. So I think we're going to be sort of just watching all markets, typically the way we've been doing in the last several years.
Okay. And Lola, I did want to ask you about how the energy market and the oil prices have affected revenue and perhaps your issuance. Of course, the oil market did get hit really hard at the height of the pandemic, but it's really recovered now, and we're seeing a big boom in prices. So how is that affecting?
It certainly has had a positive impact on revenues. Our fourth quarter update suggests that revenues forecast that revenues will be 6.9 billion higher from non-renewable natural resources. It also obviously impacts employment markets and therefore income markets. Our income taxes are up a couple of billion. And so primarily the reduction in the deficit of about 10 billion is due to the higher oil prices. We're currently forecasting $65.50, and if the oil shortage that seems to be taking over the energy prices lately continues, maybe we can do better. But as Mike said, it's awful early to tell for sure. Lots of uncertainty.
So you are forecasting at least a little bit better prices in the future?
Well, we started off the year. We started off the year at 46. We went to 65.5, and we haven't changed that official forecast. The trend is our friend right now, but oil prices can shift the other way in a heartbeat. So one never knows.
Has the appreciation of the Canadian dollar been a headwind at all to your exporters?
For us, an appreciation in the dollar means, since oil and natural gas are priced in U.S. dollars, means we get fewer U.S. dollars back, or Canadian dollars back, from our U.S. dollar trades. And so actually an appreciating dollar hurts the Canadian, or appreciating Canadian currency hurts our revenues. Not as much as oil price gains have helped us, but we're actually exposed to an appreciation Canadian dollar.
Okay. So it hasn't offset completely, though, the benefits of the higher oil prices?
Not even close.